With the fast-paced development that India is experiencing, it is obvious that the state of our economic affairs will become the center stage of our interest in many Indians' life. If we take a step back and look at the broad happenings in India's economic front, a few recent incidences will stand out. It may be implementation of the GST, or demonetization, or the new insolvency law, or the whole issue regarding NPA and the banking crisis, and the fight between RBI and Government of India. In this series, we will explore how the NPA and the banking crisis affect your pockets, and to understand the issue better, we will delve into the working of banks, how the fault lines propagate, how to cure the NPA issue, and the whole stuff between the government and the RBI. This is a list of 20 major banks in India in alphabetic order. When you deposit your money into one of these banks, the interest rate that you can expect is very different. We can leave HSBC and Citibank from this list as they majorly hold foreign transactions and cater to the foreign customers. We have 3 banks that give well below the median 4% return, and we have 3 banks that give well above the median 4% return. The reason why a few banks can give you returns above the median may be many. Maybe they are in better health, or maybe they need deposits immediately. Let's look at the scenario when you go to these banks for loan. When you take a personal loan, the interest rate they charge varies hugely. Here too, we distinctly have 6 banks that charge us well above the median 12.4% interest. We also have 9 banks that charge us well below the median of 12.4% interest on personal loans. What do these tell us about these banks, and how do we get affected from these? As a customer of a bank, we always desire to get the best return on our deposits and expect the banks to charge the least interest rate when you take a loan. This difference is called spread. As a citizen and a customer of banks, we must get the least spread from the banks for our well-being. But only when a bank is diligent, it can afford to minimize the spread. The greater the spread, the more the earning of the banks in case there are no defaults. But when banks give loans without their due diligence, their chances of getting back the loans decrease. To compensate for this lack of probability of getting back the loans, banks increase the spread. This is exactly the case. All the banks with higher spread are now under RBI's radar for the prompt corrective action to reduce their non-performing assets. UCO Bank, Central Bank, and Oriental Bank of Commerce are under the RBI's prompt corrective action regime, though it needs to be seen for how long they can hold their spread to such a low level. The banks in the green are the list of healthy banks. So, choose your banks wisely. Remember, the spread should be least. You can see the stark contrast easily in a flash in this diagram. On a personal front, we can be better ourselves by choosing our banks carefully. But many in our country do not have that luxury of choosing the bank, especially in the rural area. Even no one in this economy has the luxury to escape from the systemic risk that the whole banking system is experiencing. The subsequent sections will make clear how the stressed banks, even when we do not use them, affect our lives.